Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Massar and Matt Miller. Welcome to our audiences across Bloomberg Television, Radio Originals, and for those folks streaming in our partnership with YouTube. Massar, stocks pretty much holding on to most of the gains that they had. I think the last time we spoke about an hour ago, a little bit of a risk-on vibe here on this Thursday afternoon.
Yeah, absolutely, and we've been talking about it, right? We did it last hour as well. The outperformance that we're seeing once again in a handful of names, particularly some of the big technology companies, because that's where you're ultimately seeing the outperformance. I don't know what changed from yesterday, to be quite honest, but here you go.
Yeah, I don't know either. I think someone woke up and said, bunny, bunny.
Bunny,
well,
bunny.
Yeah, bunny, bunny. You know, yesterday, investors were selling big tech stocks because the valuations are too high. And today, they're buying those big tech stocks.
They're apparently okay.
At the S&P, it's NVIDIA, Apple, Microsoft, Amazon, Meta, all adding to the index. And if you look at a breakdown of the index by industry groups, you'll see that IT stocks are the big winners right now, and utilities, consumer staples, and real estate are the losers. So it's just the mega caps, the 7 stocks that have contributed 100% of the gains to the S&P 500 that are up today.
Well, what's different today also is we're one day closer to the jobs report tomorrow on the heels of some data that show the job market is holding up just fine, and the manufacturing data shows a bit of weakness, but not so, even as it holds up, not so strong that the Fed has to do anything about it right away.
All right, getting the closing bells here in New York, and it looks like it's going to be a pretty good day all around the tape here on this Thursday afternoon. Let's take a look at the Dow Jones Industrial Average, higher by more than 150 points, or about 0.5%. Believe it or not, that's pretty much your laggard on the day. Meanwhile, the S&P 500 moving higher by 41 points, up about 1%, and a firm close above 4,200, highest level that we've had on the S&P going back to August of 2022.
Grindr ringing the bell.
The NASDAQ composite up about 160 points, or about 1.3%, closing out at its highest level since April of 2022, while the Russell 2000 up about 1% here on the day. Carol Massar.
All right, Romaine, let's keep everybody on track here. And let's keep,
isn't that
Matt
interesting?
Focused. What, Grindr?
GRND is the ticker.
Match Group, by the way, some outperformance today, up about 10%. Hey, where you're also seeing outperformance, I know you guys always make fun of me, but if you look at those Chinese names that trade in the United States, up about 4%, so some mega outperformance. They've been under some pressure, some concerns about the Chinese recovery, but certainly not today. Back off and back in by investors.
I don't make fun of you, Carol.
Well, you do.
Well, I just play a little bit. But it is important. I don't disagree. And I like to look, obviously, at Chinese data, Chinese companies as well. If you look at the winners and losers in terms of industry group, as I was saying, it's really the IT stocks. It's the tech stocks, the mega cap stocks that are the winners. Tech up 1.25%. Industrials up 1.25%. Energy up 1.25% as well, as we see oil recover. It was down below $70 a barrel yesterday. It's come back up pretty strong today. Utilities and consumer staples, the only losers, and even they aren't down by too much. Consumer staples only off by less than 0.1%. All
right, let's get to some of the gainers today. I am really kind of bummed. I had Match on my list earlier. I think it's the number 1 in the S&P 500. I took it off, but it is up 10% today. So anyway, let's focus on another M company. Macy's up about 1.2%. We'd seen some selling earlier in the day. We've talked about this. The company, taking markdowns, other measures to address excess spring merchandise. They also cut its earnings outlook for the rest of the year. But nonetheless, by the end of the day, investors pushing it up about 1%. NetApp also was an outperformer in the NASDAQ 100. You're looking at about an 8.5% gain here by the close. Results topping expectations. Analysts pretty pleased and saying that a lot of the results really helping to bolster its margins specifically. And then NVIDIA, back among the gainers. This one up about 5% once again. Company CEO, you might have seen a story by Bloomberg heading to China, plans to meet China executives in the world's biggest chip market. And that's despite some of the tensions between the U.S. and China and despite U.S. curbs against China. But nonetheless, NVIDIA, the CEO, making quite a world tour and spending a lot of time over in China this week.
All right, I'm going to take a look at some of the decliners here because Dollar General, despite the overall rise in the market, had its biggest one-day sell-off ever, losing 20%, the worst performer in the S&P 500, after it slashed its full-year forecast to reflect that it's no longer expecting profit growth, talking about economic pressures on its customer base of lower-income shoppers. We already knew this would likely happen from Dollar Tree and Target's similar warnings. And Lucid, the EV maker, is raising about $3 billion through a common stock sale. Its biggest shareholders, Saudi Arabia's sovereign wealth fund, is buying the majority of the issuance, which, according to Bloomberg Intelligence, reduces the likelihood that Lucid will go private anytime soon. And finally, Salesforce, which we broke the earnings for you yesterday, quarterly earnings beat, but it failed to raise its full-year forecast, so you can see the stock losing 4.7% on the day.
All right, the Lucid story, I think, is fascinating, and I'm glad they get to go on a little bit longer, but it's definitely dilutive to shareholders. Let's take a look at what's going on in earnings. Five Below is coming out with maybe a little bit of a disappointing forecast. It did beat on first quarter EPS, 67 cents. We were looking for 62 cents, but they see second quarter EPS between 80 and 85 cents, and the street was looking for 88. They see second quarter sales between 755 and 765 million. The street is looking for 768. And this kind of reminds me a little bit of Dollar General, which Carol was talking about earlier, also disappointing investors. If these stores at the low end of the, I guess, economic spectrum are missing, that is
Stock's rallying.
That is maybe bad news.
It's rallying, though.
The stock is up in the aftermarket?
Mm-hmm. Yeah.
All right.
Yep.
Well, it's all over the place, actually.
Yeah, we're going to get another read on some other retailers as well. Lululemon, of course, which makes a little, I guess, higher end
different end of the spectrum.
They're going to schedule to report a little bit later. We're going to get Broadcom and a few other names here after the bell as well. Before we get to those, let's get a quick check here on what's going on in the yield space here, because remember, we had 11 straight days really of a sell-off that was going on in the Treasury market, and that's actually flipped now to basically a 3-day rally that continues to push yields down just a little bit here. We're right around 4.3% here on the 2-year yield, down about 6 basis points on the day, 3.6 on the 10-year yield, and your 30-year camped out right around 3.8%, Carol.
All right, so let's get to Lululemon, just crossing the Bloomberg terminal. Here's the red sticky, the big headline we're focusing on. Company with the outlook for the fiscal year net revenue, $9.44 billion to $9.51 billion. It had seen $9.3 to $9.41 billion, so it's definitely bumping up that forecast. Right now, though, the stock initial reaction down about 2.5%. Let's go to the first quarter. First quarter EPS, $2.28 a share, folks. That's a beat. The estimate was for $1.97. First quarter stores comp sales ex FX up 16%. That too is a beat. The forecast was for a gain of just under 12%. And if you look at the gross margin, 57.5%. That's a little bit better. All right, now we're seeing some reaction to the upside. Right now, the stock is up, Scarlet, about almost 6%. On the year, though, ahead of this, just up about 2.5%.
Also, gross margin, 57.5%, which is better than the expected 57%. And looking through the comments, the CFO talking about a meaningful acceleration in their China sales trend with the reopening of the Chinese economy, coupled with lower costs, in particular air freight, contributed to the better than expected performance. So Lululemon seeing some increased profitability here. It goes back to that idea that the premium customer seems to be holding up just fine in this economy.
Yeah, that's actually, we were talking a little bit earlier, Scarlett, with the Bloomberg Intelligence retail analyst, Mary Ross Gilbert, and she pointed out that, Nordstrom has average household income of $150,000, and even Nordstrom Rack is $100,000. Whereas if you look at Macy's, the banner stores, it's only $75,000. That to me was a little bit surprising. And so those stores that are serving customers at the lower end of the earnings spectrum are disappointing, it looks like, while those that serve people that are wealthy enough to buy Lululemon yoga pants for $120 or however much they cost are doing well.
It'll be interesting to see whether that holds up. I thought some of the commentary that we had, I think it was out of Capri a couple of days ago, of course, makes Versace and Michael Kors. They seem to also be suggesting that you are still seeing a shift in spending there. Obviously not to the extreme that a Dollar General or the lower income spectrum is seen, but something to keep an eye on there. And I guess, Matt, I mean, you poo-poo $100. You probably have $120 pair of yoga pants somewhere, don't you?
Or $1 million leather jackets.
Right, yeah.
Yeah, there you go. There's
That's right.
there's a weak spot.
Matt Miller single-handedly keeping the motorcycle jacket business in business.
All right, let's go to VMware. They're coming out with their earnings, just crossing the Bloomberg terminal. First quarter revenue, we're looking at a little bit of a disappointment, $3.28 billion. The estimate was for $3.31 billion. First quarter adjusted EPS, $1.49. That too is about 6 cents light. So we're seeing the stock, at least so far, little change, just slightly lower in the aftermarket. So we'll look for some more data on some of the subscription and license revenue, some of the numbers there to get a better feel on that number. All right, guys, anything more that we want to pick on Matt about?
Aw.
Just make sure to say bunny bunny at the start of July.
Bunny bunny. And also in August, right?
Yes.
Okay.
And then back to rabbit rabbit in September.
We got
I
it.
love you, Scarlett. All right, guys, that's it. We got to go. That's all, folks. Another bunny said that. Remember that? Bugs Bunny.
Yeah.
That's all,
Yes.
folks.
Good one.
All right. Our cross-platform coverage, radio, TV, Bloomberg Originals, and, of course, on YouTube, Beyond the Bell. We'll see you again, same time, same place tomorrow.